Hi grade 12. So in this video we are going to do income statement from top until the end of the income statement. So this question paper that we are going to do is the question paper that was written on Eastern Cape around June in 2023. So please make sure that you stay tuned, watch until the end, so that you're gonna gain more principle how to deal with the transaction that are related to income statement. Okay, let's start with our question. Okay, let's just go straight to the information, because of course we're going to prepare income statement for the year end 28 February 2023. Okay, they give us extract number A, which is total balances from the record on 28 February. Then they give us a balance sheet section, and they also give us nominal account section, which we are going to get amount of income statement. Okay, then adjustment number B, they said the following transaction was not recorded. It's about an old vehicle which was traded in. Okay, and transaction number 2 is about depreciation. Number 3 is about an invoice for 28,800 issued to a debtor for a goods purchased on 28 February was incorrectly recorded as credit note, and the markup of these goods were 60%. So I want us to start with this part before we go to depreciation and other transactions that are related to vehicle. Okay, let's start with the part of sales. All right, we have amount that is given, which is amount of 11,724,000. Okay, it's 11 million, not 11,000. Okay, now we need to check a transaction that is going to affect these sales. Okay, so in this case we don't have any debtors allowance under our record, which means that we are going to information number 3, which I found that it has effect under what? Sales. Okay, they said that invoice of 28,800 issued to a debtor for a goods purchased on 28 February 2023, which was incorrectly recorded as credit note. Remember, when we talk about credit note, it's a return. So in other words, they subtract this amount of 28,000 by mistake, because they stated that incorrectly recorded as what? As credit note. They subtracted as return, and this was supposed to be recorded as a what? As a sales. Okay, now what do we do? Very simple. So they give us a selling price amount, which means that in this case we don't apply a markup. We're going to apply a markup only when we go to cost of sales, which means that we have to return it back because it was subtracted by mistake as a return. Okay, it's plus 28,800. But we are not done. We just reverse a mistake that they did. Now we have to do the right thing by doing what? By recording the amount of 28,800 as sales. We have to record it double, the one for rectifying mistake and the other one to do the right thing that was supposed to be done. Okay, we can't just add it back once, because if we just add it once, remember, it was subtracted, which means that we're adding it back and we left it as it is, as nothing happened. And remember, this was a sales that was supposed to be recorded. Okay, now because they give us a markup, obviously they are using a perpetual inventory system, which says that whenever we record sales, we must also adjust cost of sales at the point of sales, which means that even under cost of sales, we have to go and add it. Okay, then a cost of sales amount is 7,363,500. Okay, now what do? We have markup of 60%. Very simple. The amount that we are going to add, we are going to say, okay, let me show calculation here. We are saying 28,800 multiplied by, because we are looking for cost of sales. Cost of sales is 100%, and what we have is 160%, because this has included what? A markup of 60, which means that is going to be 160. Okay, then if you do this, you're gonna get amount of 18,000. Even this side, we have to record it twice, the one for rectifying and the one for sales, 18,000, just like that. This is the calculation. Then you will get this one, and you also double like the one that we did on the previous one. Okay, then the total this side, it will be 11,781,600, and the other one 7,363,500. Okay, then gross profit, you just take this one minus this one, and you're gonna get 4,418,100. Okay, now let's go to other income. Discount received, it was given. Some of the amount, I will just write them as they were given on our answer book. Like audit fee, it was 180 and 60. There was no transaction for this adjustment. 56,920. Okay, the other one, interest income, it was given as 120,000. Okay, then the other one, it was tax. It was given, even though I'm going to explain into detail about this one. Okay, now let's proceed. We're looking for provision for bad debts and rent income. Let's look at those transactions. Let's start with provision for bad debts. Transaction number 5. They said provision for bad debts must be decreased by 2,000. Provision for bad debts, it means that these are the people that we are doubting that they are going to pay us back. If there are more, it's as expensive to us, because if more people are not going to pay you, it's a loss. But if less people, if those number of people that we are doubting that they are not going to pay you, they are decreasing, which means that it's an income, which means that more are going to do what? To pay. That's why when it says decrease, we regard it as a what? As income. Decrease does not mean a loss. It's income to us, because decrease of those people that we are doubting simply means that more money coming. Simple. Okay, it's 2,000. Okay, now let's go to rent income. I know that this one is kind of tricky to most of people, but I'm going to try to simplify it as much as I can. Okay, so number 6, rent increased by 10% per month with the effect from 1 September 2022. As per lazy agreement, rent is received until March. Actually, this rent has been paid in advance. In other words, we have to find amount of March and we subtract it. Okay, so the amount of rent that we are given is 174,675. We need to subtract that 1 month. Okay, how are we going to do it? Let's first check. This rent has increased from when? From 1 September. September, October, November, December, January, February. 7 months has increased. Okay, 7 months of increase. Then before increase, how many months? Of course, it's from, because our year end February, which means that it started March, April, May, June, July, August. 6 months is before increase, because it has increased on September, which means that before is 6 and it has increased for 7 months. Okay, 7 months is September, October, November, December, February, January, March. We also have to count March. The reason why we count March, because it has been paid until March. Okay, 6, which means that it's gonna be 6 plus 7. Guys, you have to write it as it is on your calculator. 6 plus 7, and you open a bracket. You said it's always 100 here. If it decreases, you were supposed to write 90, but because it has increased by 10%, we write 110. Okay, if you do this calculation, you are going to get 13,7. 13,7. Okay, so which means that this 13,7, guys, is the one that you are going to divide it by 174. You are going to say 174,675 divided by 13,7. You will get amount before this rent has increased, but now it's going to be simple for you to calculate the one that we are looking for, which has already have effect of increase. 174,675 divided by 13,7 is give you 12,750. But this is rent of 1 month before increase, which means that if you want to calculate increase, you just say 12,750 multiplied by, I just want straight answer, I'm just gonna say 110 over 100, and I'm gonna get multiplied by 110, I'm going to get minus 14,025 rand. Very simple, 14 and 25 rand. This is how you should do it, guys. So please make sure that you put it as it is. I know that 6 plus 7 is going to give you 13, but if you write 13 and you open brackets 110 over 100, you can try this. You're not going to get this one. You're not going to get this one because this is in the same bracket with this one. This one is on the separate side. So do it correct. Count those months correctly. You will get it. Very simple. It's not difficult to adjust this transaction. Okay? Then which means that here, now we're gonna get our answer. Okay, let's me rub here so that I can be able to calculate other thing. Very simple. So I hope now you have learned something when it comes to rent income. Please just appreciate me by subscribing to this channel if you are learning something, because if this channel is not growing, guys, there's no reason for me to do more videos, because if we stay on 6,000 subscribers but more people are keep watching, I know that some of you guys, you just come here watch video. I don't know why, because to subscribe is just free of charge. No one is going to take any cent from you. Subscribing is like to follow the channel. So please subscribe, guys. I'm gonna do more videos for you. Okay, let's proceed now. Let's proceed. Let's get the total this side. It's going to give you 160 and 650, just like that. Okay, let's proceed to the next one. Okay, the next one, now we are going to expenses. Okay, under expenses, expense number one that we are going to deal with is loss on sales of assets. Okay, because these two we already done, they were there on the answer book. Loss on sales of assets, let's look at the transaction number one. An old vehicle cost price of 270 was traded in on 28 February March 2013 for a newer model of 16,500. We don't care about that one because we are not doing any asset disposal. So accumulated depreciation on the trade-in date, no need to calculate depreciation, was 1,111,240. Okay, and the trade-in value for old vehicle was 105. Okay, now we need to compare 270 minus 111,240. We're gonna get a current value of 150 something. And when you compare 150 something, our value is high, but we sold it by amount of 105,000, which means that we make a loss. We sold it by 105, but it's worthy 150 something. If you subtract these two, then it's a loss. Okay, but if we sold it by high price, it was going to be profit on sales of assets. Okay, it's a loss of 53,760. Okay, depreciation part. Okay, this depreciation part for this question paper, it was not tricky, but if you don't know, you are going to get it wrong. Number one, we need to calculate depreciation of vehicle first. So the one that has been traded in, no need to calculate depreciation because it was purchased on the last day of financial period, which means that it didn't stay even a single month. Okay, we're going to calculate the old one. A vehicle cost under our balances is 1,350,000 and we less 855 because they say we have to use a diminishing balance method and by 20%. Okay, if you do this calculation, guys, you are going to get amount of 99,000. Okay, then the other one, we just need to compare the difference between accumulated of beginning and the last balance of the year. Accumulated depreciation at the beginning, guys, for equipment, it was 800,900 minus 923. It has increased, obviously. The difference between these two is the depreciation of during the year, which is going to give you it's going to give you amount of 122,360. What you need to do now is to add these two balance and you will get amount of 221,360 as depreciation. Very simple. The next one, bad debts. Okay, bad debts, we have our opening balance of 15,090, and if we check transaction number 4, they say an amount of 3,230 which was not received from insolvent estate as a debtor must be written off as irrecoverable, which means that this one is also be added as a bad debt. 3,230. Okay, and it's gonna give you 18,320. Then salaries and wages. Salaries and wages, at the beginning we have amount of 982,290 plus, let's take the transaction number 6, extract from salaries journal for February 2023. We don't focus on contribution. Contribution is liability. We only focus on net salary and deduction, which means that we're gonna add 47,330 plus 15,600. Okay, and you will get amount of 1,045,220. Okay, the next one is director's fees. Director's fees 1,925,000 plus the one that we are going to work now. Okay, director's fees transaction, they say that number 7, a company has 5 directors until one resigned 30 June 2022, and the one who resigned was only replaced on 1 October, and all directors are on the same fee structure. They paid same amount. One problem solved. Okay, then they say the fees of 2 directors for February are still outstanding. Okay, the one that is outstanding now is for 2 directors, which means that it's for 1 month of February. And now again, remember, from 30 June until October, which means that is July and August. Okay, they said that one is resigned until 30 June. Okay, simple means that we have to count from July, August, and September. It's 3 months. These 3 months, there was no one. Plus these 2 months, which means that it's going to be to give us 5 of missing what? A missing salary. It's a 5. It's for 2, which are for those 2 directors that are not paid for February, and those 3 months of those remember the other one resigned on June, which means that no one was working here. They were not paying anyone for these 3 months for that one director who resigned, which means that in total 2 plus 3 is going to give you 5. Now is going to be simple in this case, because 5 is like, now we assume that that amount of director's fee is for 11 months. It's for 11 months, which means that what we need to do is to take this amount of 1925 million divided by 11. Then we're gonna get amount of 1 month. Okay. Let me calculate it here. 1925 divided by 11 is gonna give us 175. It's 1 month, but for 5 directors, and we divide by 5. Divide by 5, and we get that one director paid one amount of 35,000, which means that now it's going to be simple. 35,000 is for one director, and we multiply by 2 because there are 2 directors that didn't pay on February, which means that it's going to give us 70,000. Then we will be done with directors. Okay. Then the total will give us the total will give us 1,995,000. Okay, then it will give us amount of 1,995,000. So now let's proceed to employers' contribution. So employers' contribution, we were not having any adjustment, which means that we are going to record amount of 63,620, just like that. Okay, then after that we are going to adjust the part of net profit before tax as well as net profit after tax, because we have a balance of standard expense which we need to do it as a balancing figure. Okay, so the transaction that are related to this part, they said income tax for the financial year was calculated as 242,040 rand. So which means that our income tax, we have it as 242.40 rand. And they say net profit after tax, we need to check that this is 30% of net profit before tax, which means that we can calculate it by this amount, 242,040 multiplied by, we are looking for after tax, which is 70% by 30%. It's gonna give us amount of 564 and 760. Okay, then for before we just add it with this one, we add these two, then we're gonna get profit before tax of amount of 806 800. All right, then interest expense. Let's go to transaction number 9. A loan statement received from Samville Bank reflects the following. They give us balance, interest capitalized, repayment, and balance at the end. It's very simple because we are looking for interest capitalized, which means that you take opening balance and you subtract those other 2 amounts. This is the calculation that I show here. Then after that, you will get interest expense of 179,500 is minus because it's interest expense. Interest before expense, you just add these 2, then you will get amount of 986,300. Then after that, we have interest income. Interest income, it was given in this case. I forgot to copy this amount. There was no NMAX allocation for this one. Okay, which means that interest operating profit, now we have to take this one and we add it with this one, then it will give us operating profit. Okay, actually we subtract this one because when we go down, we are going to add, then it will give us this amount. Then it will give us amount of 866. Okay, 866,300. Okay, this is how we should calculate this part. Okay, in order for us to get the amount of gross operating income, we have to take gross profit, then we add other income. We add these two. Obviously other income, we have it because we already calculate everything here. It's going to give us 195 and 55. Then if you add these two, it's going to give you this one, which is going to be 4,613 and 150. Okay, then after that we have operating expenses. Operating expenses total, guys, what we need to do is to take gross operating income and we subtract operating profit that we got here, so that we can get total operating expense. We're just going to take 4,613,150 minus this one. The difference between these two, because when we add them together, is give us this one. When we subtract them together, okay, 866,300, then it will give us 3,746,850. Now we can get this one as a balancing figure, because if you take this total and subtract everything, you are going to get a balancing figure of 112,590. So this is how you should prepare income statement for 40 marks. The marks allocation for everything, it was 40 marks. So I hope you enjoy, guys. Please make sure that you subscribe so that I can keep doing more videos for full income statement like this one, so that you can prepare your examination. I'm gonna see you on the next one, and please don't forget to attend our extra class, which is only 60 Rand per month. See you.